Throughout the centuries, gold has always been considered a hedge against inflation. However, it is not resistant to widespread economic instability. The precious metal has been falling for the sixth straight month, as the Federal Reserve continues on its aggressive rate hike cycle. The soaring interest rates are making gold appear a less attractive investment vehicle in this time of uncertainty. As gold plummets below $1,700 per ounce, fearful traders seek refuge in the US dollar. But on the other hand, this presents a great entry point for those eyeing gold and gold stocks. History is a witness to the fact that gold is an evergreen commodity. It may go down in a market downturn but will always rally as soon as the air clears. Hence, we bring you the best gold stocks to invest in right now and benefit from a future rally. Coming first on our list today is a Canadian multinational miner, Barrick Gold Corporation, which trades under the ticker symbol GOLD. Based in Toronto, Barrick is one of the largest gold mining companies globally. The company distinguishes itself with a focus on Tier 1 mining assets. These types of assets have the ability to produce over 500,000 ounces of gold per year, and productive life of a minimum of 10 years remaining, with low operations costs. Currently, the miner expects to produce around 5.5 million ounces on average every year through 2031. Another huge plus of the company is its wide geographical presence. It has operations in 18 countries on 4 continents throughout the world. This limits the volatility associated with having a few precious metal assets, due to geopolitical or operational problems. Presently, the company is in the final steps of completing an agreement for 50% ownership of Reko Diq with Pakistan. Reko Diq is one of the largest copper gold deposits in the world. Complementing its top-tier mining portfolio, Barrick also has a strong balance sheet. Throughout the past several years, the company has paid down its debts using its free cash flow and non-core asset sales. This has resulted in financial flexibility for the company, and enables it to pay a handsome dividend. As of October, Barrick's dividend yield is 2.82%. Additionally, its top line and bottom line also continue to improve, with a profit of $488 million on sales of $2,859 million in the last quarter. In short, Barrick Gold stock is a great buy right now, with all the right elements to ensure massive gains for its owners in the future. Symbolized by the ticker symbol, FNV, the next stock on our list is a diversified gold play based in Canada, Franco-Nevada Corporation. Franco-Nevada is a gold-focused royalty and streaming company, with an international presence. It has a massive portfolio of over 400 assets across the globe, achieved through its financing services. Following its recent interest in a Brazil-based gold project, the company just completed a royalty sales and private placement agreement with Canada-based Westhaven Gold Corporation. Hence, its financial model and diversified portfolio with widespread geographical presence make Franco-Nevada one of the most risk-tolerant stocks in precious metals, particularly gold. The streaming and royalty model reduces the risk associated with project execution too. Furthermore, the company has a strong financial standing, with no debt and high free cash flow used for portfolio expansion and dividend payouts. While its dividend yield is modest at 1%, it has increased the payout consistently throughout the years. In the latest quarter, the company generated record revenues of $352 million, with the bottom line improving by 7% year over year. Its cash balance remains firm, with $1.9 billion in available capital as of June 2022, while the operating cash flow for the first half of the year was $488 million. All in all, Franco-Nevada is a good stock to hold on to for the long term, as it has a strong financial model with a diversified portfolio and comparatively lower risk factor. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Following next is another streamer, Royal Gold Incorporated, represented by the ticker RGLD. Based in the US, this company acquires and manages precious metals streams and royalties to generate profits. Headquartered in Denver, its office locations include Vancouver, British Columbia, Toronto, Ontario, and Luzern, Switzerland. Royal Gold recently acquired Great Bear Royalties Corporation through its subsidiaries. This further adds to the company's asset portfolio, by giving it exposure to Canada's latest major gold discovery, the Great Bear Project. Over the past 5 years, Royal Gold has grown its net income by an impressive 42%, which is much higher than the industry average of 28% in the same period. In the second quarter of 2022, the company had a net income of $71.1 million, on revenue of $146.4 million. 71% of the quarterly sales came from gold in the quarter. Moreover, its operating cash flow also remained robust at $120.2 million. The streamer ended the quarter with a strong balance sheet, having no debt, $280.6 million in cash, and total liquidity of roughly $1.3 billion. Currently, the company offers a dividend yield of 1.4%. It has been increasing the dividend steadily over the past few years, with a 17% increase in the latest quarter, which was 35 cents per common share of the company. In conclusion, Royal Gold with its strong fundamentals is another great good stock to buy and hold on to. Coming next is an American mining play in precious metals, Southern Copper Corporation, represented by the ticker symbol SCCO. Largely known for its copper production, this miner also produces big quantities of gold and silver, among other precious metals. Its operations extend to Peru, Mexico, Argentina, Ecuador, and Chile. Being the largest producer of copper, gives this company an edge over most gold stocks primarily focused on gold production. Copper prices have remained robust due to its increasing demand, propelling the company forward at a time when gold is suffering from the interest rate hikes. Moreover, Southern Copper is a cash-rich company with high margins. It has free cash flows of more than $2.7 billion, and an operating margin of over 50%. While the earnings revision shows a slight decline over the near term, its fundamentals are strong and the long-term outlook is bright. The mining stock currently trades at bargain levels, and offers a significant dividend yield. As of October 10th, the company's forward dividend yield measured a nice 8.35%, while its trailing 12-month price-to-earnings ratio was 12.65. Thus, despite the short-term instability, Southern Copper is a great stock to buy, as it will ensure holder returns through its nice dividend yield, while precious metals like gold rebound. It is available at a much lower price of just under $50, with a decline of over 24% year-to-date. And the last stock on our list for today is also a mining company, based in Canada, Kinross Gold Corporation. Trading under the ticker KGC, Kinross acquires and develops gold and silver properties. Its operations encompass several countries including the US, Russia, Brazil, Chile, Ghana, and Mauritania. The latest developments of the company include a share buyback plan worth $300 million for the rest of 2022. And allocation of 75% of excess cash to share repurchase in the next 2 years. The company also continues to pay a regular dividend, with a current yield of 3.39% as of September 2022. This results in a payout ratio of 31.73%. Hence, both its dividend yield and payout ratio are much higher than the sector average dividend yield of 2.82% and a payout ratio of 23%. On the financial front, Kinross came out with an adjusted net loss of 1 cent per share in the latest quarter against a profit of 3 cents per share a year ago. The reason for this downturn was a temporary delay in La Coipa's mill ramp-up on top of the inflationary pressure. However, it did manage to increase its sales by 16% year-over-year, to $821.5 million in the quarter. Moreover, the stock currently trades at just under $3.50, after having declined by over 42% year-to-date. Thus, its price target of roughly $7 does present a nice upside from the current, while the company has the potential of giving good returns in the future. That's all from us in our today's video on gold stocks. We hope the information we aimed to deliver has been of help in upgrading your investment portfolio. We would love to hear your feedback on our list in the comments below. If you like knowing about different stocks and the best suited investment strategies for them, do check out our website, stockstelegraph.com.